Predicting a pair of 25 basis point hikes on the horizon, one in June and perhaps another in July. Joining us here at Post 9 is Citi's chief U.S. economist, Andrew Hollenhorst. It's great to have you. Welcome.
Thanks very much.
Have we checked all the boxes, do you think?
I think that's pretty much the full list of what's led markets to start to price this in. Actually, if you look at that pricing for June, we have about 14, 15 basis points priced in of a 25 basis point hike. So I think markets are coming around to this view, too.
What happens to those who were counting on M2 collapsing and lots of disinflation traction? Are those not factors anymore?
Yeah, so you're seeing some of this liquidity drain, and that's actually going to be kind of amped up by what's going on with the debt ceiling being resolved. You're actually going to get a lot of issuance from the Treasury, a lot of liquidity drained out of the system. So that's another thing that's happening. But in terms of the inflation numbers themselves, if you look at core PCE last week, on the year-on-year basis, we actually moved up to 4.7. So there's a real sense that this inflation is proving sticky.
Is that why you always were at 2 rate hikes? Because you were like way out of consensus when the market was expecting a pause in cuts.
Yeah, what we do is really try to forecast out the data, just like you're saying, look at where inflation is going to come in, and then try to understand what can the Fed do in that situation. And this is a Fed, I think, is very important. This is a Fed that is regaining credibility after inflation overshot. So they're really trying to show that they're responding to higher inflation, and that's probably part of what's going to push them to hike in June.
But do you not sympathize with the view that they could pause now and just continue to see what the impact is going to be of 500 basis points of tightening, which is a lot in a very short time period, as we're getting toward the end of the fiscal stimulus, as we're getting toward, this massive issuance of Treasury, a lot of still questions. Regional banks, yes, it's abated, but we don't really know what's happening there.
Yeah, a lot of moving parts like you're going through. And
I can make an argument on both sides.
Yeah,
really.
That is a reason that, as you get to this kind of final stage of the rate hike cycle, you might want to be more careful and kind of think about this as fine-tuning where you are. The issue, I think, really comes back to communication. If the Fed doesn't hike in June, even if they say that's a skip, we're not hiking in June, but we may hike again in July, we may hike again down the road, does the market interpret that as a skip? Or does the market just say, that's a pause, that's the end of the rate hike cycle, and now we're looking for you to cut rates, bringing interest rates lower, and actually re-stimulating the economy? If you looked at house prices this morning, house prices were up. And that's an issue for the Fed.
It makes me wonder whether or not the chair, when he said that tweak to guidance was, quote, meaningful, if he wishes he could maybe have that back. Or maybe not. What do you think?
Yeah, I think what the Fed has been trying to do in all their communications over the last month or so is just keep all options open. They really want maximal optionality here. Like Sarah was talking about, you don't know how much the economy is going to slow by, so you want to respond. But then when you look at the data keeps exceeding expectations on both growth and inflation.
As for the notion that excess savings are getting whittled down, right, and that there's this, eventually the consumer will end up having to face reality, some argue that that might also get pushed back because the job market is so rewarding. Does that make sense?
Yeah, it does make sense. And I think we've all been surprised at how powerful that force from excess savings has been. You see consumers that continue to spend out of those excess savings. But now you layer on top of that we've had a very strong jobs market month after month. If you're adding 200,000 jobs a month, that's a slower number than where we were a few months ago. But that's still putting a lot of income into the economy, and that's still driving that consumer spending.